Insurance versus History podcast. I'm Meredith Brasher, and I'm excited to dive into more episodes where I examine how insurance has changed history. I have a bachelor's and master's degree in history, and for 20 years I worked in the insurance industry, underwriting exposures for everything from paranormal investigators to the world's top 500 companies. Do you want to know how history happened? Insurance can help. What a year this has been already. I'd like to start by thanking the Dallas Insurance Law American Inn of Court for inviting me to speak at their February meeting. We talked about the history of the Montrose endorsement, which I will revisit in an upcoming episode. If you're interested in having me speak at your event, you can reach out to me at Meredith, Meredith, at insurancevshistory.com. This is a new email, but my old email works too. Or you can contact me through LinkedIn. If you enjoy the podcast and want to support even more episodes, you can contribute to the show costs by tipping me on www.buymeacoffee.com/insurancevshist. Links are in the show notes. I'd like to thank those of you who donated in the past few months. It's a huge help. If neither of those appeal, you can also leave me a review on your podcast player of choice. Totally free. Insurance is one of those industries where we don't talk much about people who make a major impact. And that's by design, of course. It's partly because the industry likes having a very low profile, and because we're dealing with tremendous amounts of money, and no one wants one person to oversee making decisions about billions of dollars. Or at least no insurance company wants to admit that. However, there are people who've made big impacts on the insurance industry. A few months ago, Peter Mansfield and I talked about one of those people on his podcast, Insurance Covered. That person was Cuthbert Heath. I always loved talking to Peter about just about anything insurance related, but afterwards I knew there was a lot more I wanted to say about Cuthbert that we just didn't have time to cover. Cuthbert is one of those people who has a bit of a mythology about them. Sometimes deserved, sometimes not. He's best known as the underwriter at Lloyds who said, after the 1906 San Francisco earthquake, to, quote, pay all of our policyholders in full, irrespective of the terms of their policies, unquote. He's often referred to as the founder of modern Lloyds, and some people even go so far to call him the founder of modern insurance. I wanted to do a deeper dive into Cuthbert today, and I hope you'll join me. This is a story about the modernization of insurance at the turn of the 19th century, an underwriter with an enormous desire to prove himself, the power of well-managed publicity, and how Lloyd's went from a marketplace that insured only marine insurance to the vibrant market it is today. And it's a story about how the world became modern to boot. Cuthbert Heath was born in March 1859 in Southampton, an area southwest of London. He was a true middle child, born fourth of 7. Well, I love the name Cuthbert, and it was actually a popular 19th century British name. He went by Bertie. Bertie's father was Sir Leopold Heath, a career Navy man. Leopold worked hard and achieved the designation of Rear Admiral, which is a few steps down from a full admiral, but still a pretty big achievement. Bertie's mother, Mary, was from a prominent banking family. While not nobility, the Heath family was wealthy. The family wasn't rich enough for the children to live a life of leisure. The boys were all trained for future occupations, and the girls were expected to marry well. Cuthbert, I just can't call him Bertie, I'm sorry. Cuthbert was born healthy, but developed significant deafness from a childhood disease. Rough play with one of his brothers in his early years exacerbated his condition. From the history, I suspect somebody whacked Bertie in his bad ear. Cuthbert's partial deafness would come to define his life choices. Like most boys in a certain social class at the time, he and his brothers were sent away to school at a young age. Cuthbert left home at 8 to attend the Temple Grove School, which was located just outside of London, but far enough away that he could not come home often. His oldest brother was also a student there, so he wasn't entirely thrown to the wolves. The Temple Grove School was so austere, the food terrible, and it's unclear whether Cuthbert liked it there or not. All indications were that he was not big on school anyway. A few years later, he moved on to Brighton College, slightly closer to home, where his other brother Fred was. Cuthbert and his brothers were separated from their family, but honestly, it wasn't as if his father was around anyway. Over Leopold Heath's career, he'd been stationed in Borneo, West Africa, Bombay, Lagos, and Malta, and he fought in the Crimean War. I'm amazed Leopold found time to come back to England and get married, much less father an impressive 7 children, though honestly not as impressive as poor Mary, who had 7 children in a 10-year span between 1854 and 1863. Yeesh. When Leopold was home, his personality was, as you might expect of a rear admiral, stoic and unemotional. He had high expectations for his boys and was known to respond to academic success with questions as to why the boy hadn't done even better. He sounds fun. While 3 of his brothers went into the Navy, Cuthbert's partial deafness excluded him from that occupation. He left Brighton College at 16 and moved to Europe, where he studied French and then German, and then studied chemistry, quote, in a very mild way, unquote, according to his own notes. His primary biographer, a man named Anthony Brown, suggested that Cuthbert had an aptitude for language, which I'm not entirely sure I buy into. If he spoke French or German well, his history in insurance doesn't really address it, and I wonder how his deafness figured into the difficulty of language learning, especially back then. It seems like an odd path. This seems like the path of someone who didn't know what they wanted to do with their life, maybe a little bit of trying to escape their family expectations, and frankly, having the money and time to putter around Europe without any plan for his future. It's meandering, right? A little less focused for someone the insurance industry paints as this very important figure in the field. My feeling about that is bolstered by Cuthbert's comments in his journal that in 1876, when he was 17, he was, quote, placed, unquote, at the insurance office of Henry Head and Company. So he did his year abroad, and then someone, likely his father Leopold, basically told him to come home and get a job, and this was the job that Leopold got him. Insurance was not a field that any Heath had ever been in, and it was almost like Leopold just wanted to get him settled somewhere and out of his hair and probably also his pocketbook. Head and Company was a modestly sized company affiliated with Lloyd's and had only been around for about 10 years. It was a small place to put someone if you had high expectations for them, which I find very interesting. I'm making a big inference here, but Cuthbert's history does kind of prove it out. I mean, he was not the kid that Leopold thought would do great things. Cuthbert started at Head and Company filling up the inkwells, but it appears he was there for about 4 years, so I assume at some point he started working on insurance placement and learning about underwriting. I hope so, because his father was about to lay out quite a bit of money to launch Cuthbert into his own place at Lloyd's in 1880. Before we get into that, let's take a step back and talk about Lloyd's at this point in history. For many years in the late 19th century, Lloyd's had been in a period of long stagnation. I'm not going to get into the history of Lloyd's in detail. I mean, you can listen to my episode on coffee or the episode on asbestos if you want to understand what Lloyd's is and how it works. But what is important for my discussion today is that until the 1820s, Lloyd's had a virtual monopoly on marine insurance, insurance for ships. And that was pretty much the entirety of what the underwriters at Lloyd's wrote. Lloyd's isn't an insurance company. It's a marketplace of individuals writing business on their own, supported by the financial backing of people called names. And the only thing they really wrote at Lloyd's was marine insurance. The only other entities in England allowed to write marine insurance by law were 2 chartered insurance companies outside of Lloyd's that had little or no interest in writing that business, partly because they never could lure away experts from Lloyd's to teach them how to do it. But this Lloyd's monopoly on marine insurance changed in 1824 when Parliament passed an act which basically opened up the insurance market for marine insurance to anyone who wanted to take a crack at it. In addition, and I've talked about this before, but this is the period in history when joint stock companies were beginning to really take off. These are companies owned by their stockholders, not an individual or family. Joint stock companies and their development are key to the creation of modern capitalism as we know it today. There were several joint stock insurance companies established in Britain in the early 19th century, and they were hungry for a piece of the marine insurance pie, though it is true that most joint stock insurance companies were focused on things like fire or life insurance. While the number and types of insurance companies in Britain and the US increased during the first half of the 19th century, in Britain there was a sharp increase in the industry during the American Civil War, when all the marine insurance business that had been written in the US ended up coming over to England for insurance instead. This resulted in a boom in new marine insurance companies, some of which were, quote, hopelessly unsound, unquote, according to Lloyd's historians Wright and Fail. When the war ended, the marine insurance business in the U.S. went back to insurance companies in the U.S., and Britain found itself with far more insurance companies than insurance to write. And so what happens in a soft market, a market where there are more players than premium? Well, premiums go down. Marine insurance premiums tanked, and everyone was competing for a smaller pool of business, which resulted in rates dropping significantly, companies going bankrupt, and even the companies that survived, including the syndicates at Lloyd's, found themselves looking at very poor underwriting results. Still, at this point, Lloyd's was a marine insurance marketplace and had not considered branching out to other lines of business. Partly because of this experience, Lloyd's was cautious in the last 25 years of the 19th century. I mean, it's no surprise. Anthony Brown, Cuthbert's official biographer, said Lloyd's was, quote, unadventurous to the point of inertia, unquote. It didn't help that Lloyd's was competing for marine insurance with joint stock companies that had more financial backing, which meant they could write bigger insurance limits than Lloyd's could provide. Lloyd's underwriting syndicates usually had only 2 or 3 names associated with an individual syndicate, which meant they usually couldn't write an entire risk, just a small portion of the risk. The names are the ones that provide the financial backing for the underwriter. As a result, Lloyd's wasn't the market people went to first with their marine insurance risks. I mean, why go to Lloyd's where you'd have to get 6 or 7 or 10 syndicates to agree to write your risk together when you could just go to an insurance company down the street and get the whole thing written with just one company? In addition, Lloyd's had another problem. There wasn't a lot of new blood, both age-wise and background-wise. Lloyd's in the late 19th century was basically a collection of old white dudes. And as I've discussed before, Lloyd's at this time was still the old guard it had been for years. Everyone came from wealth. Most people had come into their roles from their families, going back several, if not many, generations. It was just not a place that you could try to break into as an entrepreneur. Cuthbert left Head and Company and joined Lloyd's as an underwriting member in 1880. He was 21 years old, the minimum age required to join Lloyd's as a member. To join Lloyd's, Cuthbert had to put up money, which he borrowed from his father in the amount of £7,000. This is a lot of money, equivalent to about £700,000 today, or nearly $1 million in U.S. currency. You can see why underwriting at Lloyd's was the way it was. This was not an easy market for newcomers to access, as it had such a high financial barrier. Since Cuthbert had no connections, he joined the J.S. Burroughs Syndicate instead of setting up his own syndicate at first. 1 year later, in 1881, he was able to start underwriting for himself as he had convinced 3 people to act as his names. And while we don't have any information on who those names were, I would just about bet my life that one of those names was Leopold Heath, his father. I suspect the other 2 names were also family of some sort. According to Anthony Brown, by 1883, Cuthbert had enough business he hired a clerk to help him with his syndicate at Lloyd's. That same year, 1883, Cuthbert also started a brokerage firm. Having both an underwriting syndicate and a brokerage firm meant that Cuthbert was really set up for success. Leopold, Cuthbert's father, was involved in getting that brokerage up and running. In fact, Cuthbert's mother wrote about the whole thing and said, quote, his dear father, having as usual exerted himself to get Bertie a brokerage, succeeded, unquote. Okay, Time for an aside. I've spoken before about how you should always check your sources, and especially on the internet. Information becomes circular. An error on one site gets referenced as a fact on another site, like some terrible bot driven game of telephone. You're about to get another example of how this can happen, as I spent a good afternoon and part of another day frustrating myself to no end by dates that made no sense. Now, if you were to use the internet to find out about Cuthbert Heath, you would find that Lloyd's own website has the establishment of Cuthbert's brokerage that would eventually become C.E. Heath as 1877. Now, the date I have is 1883. And this 1877 date comes up a lot online, and it's given as the date of several things that Heath did. For even some online references to C.E. Heath, the brokerage that Cuthbert started, show 1877 as the date it was established. But in my opinion, this must absolutely be wrong. Cuthbert started at Head and Company in 1876. He didn't become a member at Lloyd's until 1880, and he didn't start his own syndicate until 1881. If he was doing all of this instead, in 1877, he was an 18-year-old wonderkind, and the whole thing makes no sense. The only thing I am sure of is that in 1877, Leopold Heath retired from the Navy, and Cuthbert was working at Head and Company. I don't know if this was a typo on the Lloyd's website that then got multiplied by other website referencing the Lloyd's info, but if the choices are Anthony Brown's book about Heath and his dates and a reference on the Lloyd's page that hasn't been updated in a long time, well, I'm going to go with Anthony Brown for now. So the moral of the story is you should always check your dates. And if someone has information and wants to challenge me on this, hey, I am open. But seeing that 1877 date on so many different websites is so frustrating. No one seems to be questioning it or comparing it with other facts. I'm just saying. Cuthbert was puttering along, doing his marine insurance thing like everyone else at Lloyd's, and at some point, between 1877 and 1885, his father Leopold, now retired and probably bored, was appointed a director at an insurance company called the Hand in Hand. How this happened and why Leopold took this role, I have no idea. It seems kind of convenient, right? It wasn't as if Leopold had any insurance background. I mean, none of the family did either, though I guess it is possible that Cuthbert's mother's side, coming from banking, might have had some experience somewhere, but I couldn't find anything. It probably looks good to have a former rear admiral as your director, I guess, though what director exactly is at this time and in this instance, I have no idea what he actually did. Anyway, the Hand in Hand, where Leopold was appointed director, was a big deal. It was one of the 3 insurance companies established after the Great London Fire, which means it was one of the oldest insurance companies in existence, dating from 1696. Here's some fun trivia. The original name of the company was, you're going to love this, quote, contributors for insuring houses, chambers, or rooms from loss by fire by amicable contribution, unquote. So I'm not surprised it was referred to by a shorter name. The name Hand in Hand came from the firm's logo, which was a pair of clasped hands underneath a crown. Eventually, the company became the Hand in Hand officially in 1836, jettisoning that earlier hard-to-remember name. The company did mostly fire insurance, but some life insurance. It would eventually be purchased by a company called Commercial Union Group in 1905 and then dissolved. Cuthbert might have toiled in general obscurity at Lloyd's if not for his father's directorship at the Hand in Hand. In 1885, Leopold asked Cuthbert if he would be willing to provide reinsurance on the Hand in Hand's fire book. Again, I have questions. My notes show that several historians commented that the way the Hand in Hand was set up as a business concern made it illegal for them to approach most insurance companies for reinsurance coverage. I won't get into that because it's kind of complicated and not particularly important here, but if the Hand in Hand couldn't go to a regular insurance company for reinsurance, that left Lloyd's as their only option. But again, this company had been around since 1696. Is the implication that this was the first time that the Hand in Hand had approached anyone about reinsurance coverage? I mean, reinsurance had been around for hundreds of years at this point in some form, so it wasn't new. Was this idea of reinsuring the hand in hand entirely something Leopold came up with to help Cuthbert? I have so many unanswered questions. Notwithstanding all my questions, the idea of reinsuring a fire insurance company was something that had never been done at Lloyd's. Again, Lloyd's was a marine marketplace. Though, as an aside, it is important to note that some syndicates at this time did some very limited fire business, but this was like nothing in terms of the general volume. There was nothing in the guidelines at Lloyd's that said you couldn't reinsure fire business, and so Cuthbert did it. By the way, this is another event that's often assigned to the 1877 date online, just FYI, and that is definitely not the right date. I'm guessing the reinsurance resulted in a decent premium, and the reinsurance was profitable because by 1887, Cuthbert had 15 names in his syndicate, up from the initial 3, and I'm guessing most of those 15 people were not related to Cuthbert at all. Heath is often called the founder of modern Lloyds or sometimes the founder of modern insurance. And before I explain why someone gave him this illustrious moniker, I want to make a little detour. I've discussed in other episodes how history changes, and this can depend on the information we have and the bias of the storytellers. Cuthbert's legacy is a great example. Cuthbert wasn't a politician, and he wasn't really famous. What we know about him depends on very specific historical sources and very limited historical information. Most of what we know about Cuthbert comes from a book titled Cuthbert Heath, Maker of the Modern Lloyds of London, written by Anthony Browne in 1980. I've mentioned him before. Browne was a journalist with the BBC who wrote several books about Lloyds. In the late 1970s, C.E. Heath, the brokerage that Cuthbert founded, approached Anthony about writing a biography of Heath. Where was he going to get the information he needed to write a biography? Heath had been dead for years. Some of his family was still alive, but the biography focused on his business career. As a result, that was the information Anthony needed to review. I assume that C.E. Heath, the brokerage that hired Anthony, had some archival material about Cuthbert. A distant relative of Cuthbert also had some of his papers, which Anthony was able to access. Lloyd's had some things as well. Anthony was able to interview some people who knew Cuthbert. He also took a lot of information from 2 books about Lloyd's, A History of Lloyd's, written by Charles Wright and C. Ernest Fail in 1928, and Lloyd's of London by D.E.W. Gibb, written in 1957. I have both of these impressive tomes in my own library, and they're just as excitingly written as you would expect, which is to say, ugh. One thing they do not have are footnotes or references. You must either accept their assertions about Heath and Lloyd's at that time as true, or you must figure out how to prove or disprove those assertions. As you can imagine, that's sort of a problem. Antony's finished book on Cuthbert has no footnotes either, which is frustrating. Some of the stories and information in Antony's book are pretty much wholesale borrowed from the D.E.W. Gibb book in particular. Side note, while I don't specifically recommend that you read either of these Lloyd's books written before 1960 unless you are very driven to do so, I will say that the history of Lloyd's mostly downplays Cuthbert's contributions, and the Lloyd's of London book sometimes even mocks them. Antony's book on Cuthbert is fine, I guess. It's exceptionally obvious from reading it that he was writing a book for a company founded by Cuthbert. Browne is, as expected, very positive about Cuthbert and very glowing about his successes. And to his credit, Antony occasionally criticizes Cuthbert, but very gently. As a historian, I'm left questioning some of the assertions of all the books and wishing I had better primary research documents. In fact, I would go so far to say Cuthbert deserves an updated biography that is more neutral than Anthony Browne's book. But I digress. The reason I mention all of this is that first, some of the information in these books I am not inclined to take as fact without additional information. Second, I think there's a lot missing in terms of Heath's career at Lloyd's. I wish we could fill in. And third, it is, in my opinion, exceptionally hard to really get a handle on who Heath actually was and the reality of his life, which I personally think is a shame. And fourth, everything talking about Heath discounts and reduces the insurance business happening outside of Lloyd's in the UK and around the world to the point where you forget it even exists. And given the types of new insurance Heath gets credit for creating, I think it's essential to clarify. This discussion is specific to Lloyd's only and not necessarily to the rest of the world or even the rest of the insurance industry in the UK. Having said that, I mentioned earlier that one of the things Cuthbert is often given credit for at Lloyd's is the change in the way that syndicates were set up. Underwriting at Lloyd's is done by syndicates. Most syndicates had 2 or 3 names and an underwriter. As you might remember from my Lloyd's and asbestos episode, the names function as the financial money pool for the underwriter. You must have a certain amount of money to write insurance because you must be able to prove you can pay potential claims. At Lloyd's before the 1980s, that money came from the names. In the event of a loss, an underwriter would start with the pool of money that the names were required to contribute up front to pay claims. If that money ran out, and it often did, the underwriter would then go to each individual name and ask them to pony up the rest of the funds. Names were individuals with unlimited liability, which unfortunately meant that they were responsible for paying the claim no matter the size. This could be £10,000 or £100,000 or, in the case of asbestos, millions and millions of pounds. You could make a fortune as a name, but you could also lose everything you owned, too. However, there was no rule within Lloyd's that said you couldn't have more names on your syndicate than the traditional 2 and 3. It was just a general business practice that you didn't. Cuthbert had a syndicate of 15 names by 1887, and he sometimes gets credit for creating the first large syndicate, but he didn't. The first person to have a syndicate of significant size, let's say more than 10, was an underwriter at Lloyd's named Frederick Martin. Martin joined Lloyd's in 1882, and he shares some important similarities with Cuthbert, namely, he was young in an organization that was overwhelmingly mature, you might say, and he was ambitious. He also sat in the Lloyd's box right next to Cuthbert, which was convenient. Martin had 12 names on his syndicate 5 years before Cuthbert expanded his list of names. We don't talk much about Frederick Martin because he had zero interest in anything but marine insurance, but by all accounts, he was important at Lloyd's for that line of business in the late 19th century. By the late 1880s, Martin was writing so much marine business with this new expanded list of names, he was bigger than even some of the non-Lloyd's joint stock marine insurance companies. Cuthbert had to have seen this with some envy, and I think it's safe to say the idea for his 15-person syndicate came from Frederick. So at this point, insurance in Britain consists of fire insurance, marine insurance, and life insurance, and that's pretty much it. We think about all the different kinds of insurance we have today, hundreds of types. And here comes Cuthbert Heath, who starts writing all kinds of things outside fire, marine, and life. The first type of insurance that Heath is given credit for is burglary insurance. It's unrealistic to think no one had ever considered writing burglary insurance before, but it appears that no one wanted to take on the potential for customer fraud. Apparently, no one seemed to trust UK customers and believed they would all commit fraud if they were offered burglary insurance, and this was the reason no one had really insured it. Burglary in London in the last decades of the 19th century was increasing, or at least getting a lot of lurid newspaper coverage. In 1889, a broker who was at Heath's box one day renewing his personal fire insurance policy asked Heath jokingly about covering burglary, to which Heath apparently replied, "Why not?" This "why not" would become famous as a description of how Heath did business, but let's back up for a second. I mean, plenty of insurance companies had been asked this question about burglary insurance, and, well, why not had a lot of good answers, like fraud or the inability to confirm the items in question existed. The burglary policy that Heath agreed to write got a lot of media coverage. The broker in question advertised in newspapers that his brokerage would gladly help customers get a burglary policy written at Lloyd's, and Wasn't long before several other insurance companies outside of Lloyd's started writing it too. Well, at least that's the story that Anthony Brown tells. Now, depending on which historian you ask, who came up with the first burglary policy is still up for debate. Some scholars argue it was first written through a company out of Glasgow called the Mercantile Accident and Guarantee Corporation, which started issuing policies the same year as Heath and became a big player in the industry. Some scholars, honestly mostly Lloyd scholars and Anthony Brown, give it to Cuthbert. I would say either way, it was clearly a coverage concept that was reaching critical mass. Before long, burglary was a standard offering with most fire companies outside of Lloyd's, and most of the burglary written at Lloyd's was reinsurance for these companies. Now, when you're the lead underwriter on a syndicate made up of names of your family and friends, as I suspect Cuthbert probably still had several family members as names, well, you insure them too, right? One of his female relatives had a burglary claim on an insurance policy written by Cuthbert. She requested reimbursement under that policy for jewelry she lost. It wasn't lost due to burglary, she just lost it. Cuthbert denied the claim. And I give him credit for this because it gives a little insight to his honesty. Cuthbert thought it would be easy to provide coverage for jewelry lost for any reason. Clearly, his relative needed it, but at the time, he just never considered it. The insurance would need different terms and pricing than burglary, but he could do it. After all, why not? As a result, personal jewelry coverage was born. The next year, he started writing something new called jeweler's block coverage. This covered jewelry in transit between locations. For example, if a jeweler was taking pieces to show a potential customer in their home, as you do, of course. My jeweler comes to my house every week, doesn't yours? So, the man who suggested this insurance idea to Heath worked for a diamond merchant. He quit that job and became a jeweler's block broker for Heath and then a name in Heath's syndicate. It appears that brokering paid a lot better than his old job if he was able to save up enough money to become a name. Jeweler's block insurance coverage expanded over the next 130 years. It now covers a whole host of exposures for businesses dealing with fine jewelry. But at the beginning, it only covered the potential for loss in transit. Now, I will mention, as with this and other coverages, Cuthbert was always transparent that he took ideas from other people, just like this one. He didn't claim all the glory for himself. When Cuthbert declined his relative's fraudulent burglary claim, he skirted accusations of potentially unethical behavior, right? But his ambitions highlighted an issue that Lloyd's had never addressed: conflict of interest. This is not surprising. There were lots of conflicts of interest at Lloyd's. In fact, you could say the entire setup of Lloyd's was built on naked self interest, since it started as a group of merchants insuring other merchants, after all. Everyone had a vested interest in what they were doing beyond it being a wise business decision. Cuthbert, in my opinion, gets credit, and I actually may be the only person giving him credit for this, I'm afraid. Cuthbert gets credit for highlighting just how self-dealing Lloyd's could be at the time. I mean, he used all of it to his absolute advantage, and Lloyd's members tended to get very upset about it. One of the things that Heath's expansion into new areas for Lloyd's highlighted was the need for brokers to take on more responsibility in helping to manage Lloyd's business. When you only needed to write a handful of high premium marine policies a year to make money for your two or three names, it was easy to manage your book with a small team. But with something like burglary or all risk jewelry or jeweler's block, you needed one, a lot more policies to make a substantial amount of premium, and two, some way to manage these policies, which required more servicing and claims handling and just general paperwork. While Heath expanded his own organization, it still wasn't enough to handle all of this, so he started passing off responsibilities to brokers, including, haha, his own brokerage. Okay, mostly his own brokerage, but not 100%. Then, as he wanted to do more insurance business and he needed more capacity than even his larger syndicate could provide, he formed his own insurance company. Not another syndicate, an actual insurance company called the Excess Company. He was not a creative namer. Cuthbert. This was the first time a Lloyd's underwriter had formed their own insurance company, and Lloyd's management was not particularly happy about it. Not to mention, it was verboten to use an insurance company to write business within Lloyd's. That unhappiness probably increased when Cuthbert began reinsuring his syndicate's business with his insurance company, the excess company, by printing the reinsurance contract on the back of his syndicate's policies. I can't decide if Cuthbert's boldness in doing things that brought Lloyd's management so much grief is a testament to Cuthbert or only to Lloyd's inability to do anything when syndicates or underwriters stepped outside the standards of Lloyd's. Anthony Brown says that, quote, this was to bring rumblings from the committee at Lloyd's, unquote. Well, gee, that sounds terrifying, right? No wonder Cuthbert kept pushing the envelope. There are a couple of coverages we can give to Cuthbert without a lot of disagreement. He gets credit for being the first underwriter to write loss of profits insurance as an addendum to a business fire property policy. This insurance covered the loss of profits between the time your building burned down and when you were able to get up and running as a business again. These days, it's called business interruption coverage, and it's a lot more complicated. He was also the first underwriter to write excess of loss reinsurance, which is an essential part of the insurance marketplace today. One of Cuthbert's more out there ideas had to do with smallpox. When there was a smallpox outbreak in London in 1901 and 1902, Cuthbert offered to insure individuals against getting smallpox. For approximately £1 in premium, an individual could receive £800 in coverage in the event they did contract smallpox. But Cuthbert was savvy here. He kept prices low for areas of the city where there were few or no smallpox cases, and he hiked the rates for areas where smallpox was happening. In addition, and most importantly, you had to have the smallpox vaccination just to obtain the insurance, which as an underwriter is just chef's kiss. But this wasn't exactly new because as early as the 1720s, life insurers in England asked about smallpox vaccinations and preferred people who had them. Heath gets brought up a lot in regards to earthquake coverage, and especially considering his position on paying claims after the 1906 San Francisco earthquake and fire. If you listened to my episode on the earthquake, you'll know insurance companies came under heavy criticism over payments to those who had suffered losses because many risks had earthquake exclusions on their policy. This meant that whether the loss was caused by the earthquake, not covered, or by the fire, which destroyed the city afterwards, probably covered, that was an important distinction. Cuthbert had insured all of Lloyd's fire exposure in San Francisco and probably about 20% of all the insured properties in San Francisco, period. And he famously said, quote, pay all of our policyholders in full, irrespective of the terms of their policies, unquote. This was great for Lloyd's, as it engendered a lot of goodwill, but as I said in the episode, well, he probably would have had to pay out on most things he wrote anyway due to his policy terms. Is great PR, though. The earthquake and resulting fires in San Francisco got Cuthbert to thinking about how to manage catastrophe risk that hit one area. Now, this was an idea that had been developing in the U.S. in the mid-19th century already, so I'm afraid Cuthbert shouldn't get all the credit here. Property insurance in general was becoming more scientific, and all insurance companies insuring fire risks were asking about how to best manage catastrophic risk in a time when large and destructive fires were common. The main questions they were trying to answer were things like, what reduces fire risk? What reduces hostile fire risk? A hostile fire is a fire that becomes uncontrollable, in this case, fires that jump from one building to another. How many properties can one insure in an area without risking catastrophic loss to an insurance company? California insurers are revisiting this question now, you may not be surprised to hear. It is true that Cuthbert went a step further than this discussion to ask the question about how best to estimate certain types of catastrophic loss, like hurricanes and earthquakes. I should mention here it wasn't until the 1950s that weather prediction became able to estimate where hurricanes would hit in real time. And earthquake prediction, frankly, is still pretty sketchy even now. I'm going to come back to how early weather prediction worked in a later episode, I promise. It's amazing. The best he could do was try to research what was already out there in terms of historical documents and bring all that info together somewhere. With the help of Christopher Head, who was a director at Head and Company, the syndicate Cuthbert had started out at all those years ago, Cuthbert and Christopher put together historical information going back hundreds of years and shared it with other underwriters outside his syndicate. Cuthbert said this was to keep them from undercutting his rates, but I'll give him some goodwill credit here. A couple of things Heath worked on were things he sometimes gets credit for due to the Anthony Brown book, but he shouldn't. First of all, motor insurance. That actually started back in 1904 at Lloyd's, and it struggled for a while with a lot of different syndicates vying for the business. At that time, not a lot of people owned vehicles, but there was an interesting auto racing culture that is hilarious to learn about that many of these people insured. Heath Syndicate was one of the syndicates who wrote early motor insurance, but not the first one, and they weren't a major player, no matter what Anthony Brown seems to indicate when he says Heath's Syndicate wrote the first American motor policy. It wasn't until the 1930s, well after Heath retired, that motor insurance really took off after an act of parliament made it mandatory in the UK. If you're interested in something funny about early auto racing that is well worth your time, there is an episode of the Dollop podcast, Dollop, about the 1908 New York to Paris car race, which is absolutely hysterical. There were no roads in 1908, or gas stations, or repair shops, or shocks or struts. It's worth a listen. Another line Cuthbert gets more credit from Antony than he deserves is aviation insurance. Unlike some of these other lines of business, Lloyd's took the position early on that aviation insurance, which dates from about 1911, could be considered marine insurance. It could also be written as non-marine insurance. Go figure. So anybody at Lloyd's could write it. When World War I started in 1914, insurance for aviation was put on hold in the UK. Heath was interested in the aviation business after the war, probably partly because Janesta, his daughter, was an amateur pilot in a time when not a lot of women were flying. I'm going to come back to her as one of the most interesting things about Cuthbert later. Cuthbert tried to get a syndicate off the ground in 1919 with an ex-pilot as an underwriter and Cuthbert's son, Leopold, as secretary. The organization would fold in 1921, and I'm quoting, I think, their statement about closing the business. This is an unattributed quote from Antony's book. Quote, "In view of the fact there seems to be no immediate future in aviation insurance and that there is no business to be had," unquote. Not to mention it appears their underwriter was a total dud. I was actually surprised here he didn't set Leopold, his son, up as the underwriter, and entirely unsurprised that a person who had never underwritten before failed to do a good job. Ask me about career brokers becoming underwriters off the record sometime. The Heath Syndicate did write the return leg of Charles Lindbergh's Spirit of St. Louis in the late 1920s, but that always seemed like a publicity ploy anyway, and it's just fun trivia, in my opinion. But I personally think the one thing that Cuthbert should get primary credit for and the thing he should be best known for isn't insurance at all. It's the audit. I know that word sounds boring and even a little bit scary, but it is a vitally important part of how insurance regulates itself and is regulated in the modern age. Given all the rules and regulations and required disclosures we have in insurance these days, it's hard to imagine that there was a time when insurers had no transparency to the public or their shareholders. But that was the case until the early part of the 20th century. And that was a problem for a lot of people. Lloyd's wasn't immune. After the turn of the century, the marine market, which, despite Cuthbert's attempts to branch out beyond marine, it was still the majority of what Lloyd's insured. And the marine market was in a bit of a downturn, as markets are often wont to do. There was no specific reason why the losses in the marine market after 1900 were bad. It was just bad luck, the behavior of a circular market, and for a while, marine results were quite bad at Lloyd's. The marine market was losing money, a lot of money. which, as you remember, means that many names had to pony up above and beyond whatever money they'd put up initially. This made the names, not surprisingly, very unhappy. And there were a lot more names in 1900 than there had been 15 years before, and a lot of these new names had only seen the bad times, not the profitable years. The money that Lloyds received in premium and the money they received from the names as the pool of claims money, well, what those underwriters did with that money between the time the policies were written and the claims were paid was also very unclear to outsiders. And while there were some rules at Lloyd's, the fact of the matter was that most of the money that the underwriters brought in could be invested however they wanted to invest it. No one needed to be informed and no permission needed to be obtained. This obviously led to issues in years when the investments did badly and when marine insurance losses were also poor. I mean, we're talking about the late 19th century, early 20th century here. I mean, the stock market, for example, was volatile. This was the era of the robber barons, giant monopolies like Standard Oil, I mean, the Gilded Age, that kind of thing. Imagine what some of these underwriters were doing with that investment money. And names had no right to know about the health of a particular underwriter's book of business or what was being done with their money in terms of investment. Imagine being asked to invest in something with almost no information. You are relying entirely on the ability and ethics of an underwriter and what they told you. You had no say in what they wrote, you just had to accept on faith that they were good at their jobs and that they had not put you in an impossible position. During the good years, well, this wasn't so much of a problem, but when the losses were bad, as they often were in the beginning of the 20th century, well, you can see the issue. Cuthbert, not surprisingly, had already tried to manage this issue himself, specific to the reinsurance he wrote on other underwriters' books. While I may take issue with some of the things Cuthbert does get credit for, I cannot deny he seemed like an extremely sensible person in a group of people who often relied on relationships rather than logic to make business decisions. If an underwriter asked him to reinsure their book, well, Cuthbert demanded an outside auditor review the past 3 years of an underwriter's books and determine if the underwriter's book was sensible to reinsure. What Cuthbert was doing wasn't a new idea. It had been clearly discussed by others in the past, even discussed in regard to making some kind of audit the standard for all Lloyd's underwriters. But it became more important in 1907, and Lloyd's created a joint committee to discuss how best to do it. Cuthbert was probably the best known of those members of that committee. So I want to take a step back, though, because all the books I've read about Lloyd's seem to specifically suggest this decision to create an audit system at Lloyd's happened in a bit of a bubble, and that's incorrect. The first decade of the 20th century was a period in which insurance was getting a lot of attention around the Western world, and especially in the UK and the US. And it was for much the same reasons that Lloyd's was feeling the pinch. While Lloyd's is unique in the concept of names and syndicates rather than insurance companies, clarity around the operation and writing of insurance companies was something that had been lacking for a long time. This was complicated by the fact that in this period, insurance companies had become some of the biggest companies in the world. The Equitable Life in New York was the largest insurance company in the world and had assets over $1 billion in the early years of the 20th century. $1 billion. Adjusted for inflation, this is like a $37 billion company today. And yes, like Lloyd's underwriters, there were almost no guardrails on how the Equitable's money could be invested. Heads up for the HBO show The Gilded Age. I mean, you need to put some insurance barons on there, guys. Henry Hazen Hyde and his son James, specifically. They were the owners of the Equitable, and James would be a great character. After the global recession in 1907, which was partly caused by the San Francisco earthquake and the amount of money pulled out of the economy by insurers paying claims on that earthquake, people started asking questions about these huge, very opaque companies like the Equitable. In the UK, they were looking at insurance companies as well, not just Lloyd's. In the US, this resulted in something called the Armstrong Commission in New York and regulations about how insurance premiums and reserves could be invested for the first time. In the UK, Lloyd's took the step of creating their own audit, but legal requirements from Parliament were not far behind. for Cuthbert and the others on the committee at Lloyd's, they had to figure some things out. First, how to structure the audit in an environment where an underwriter's books were closed after 3 years and then sold off to other investors. There was not a lot of long term information that could be easily accessed about loss and underwriting as a result. They were basically working with the 3 years prior to the current year, the existing book that had not been closed and sold off, and the existing year, which was still ongoing. Secondly, they had to figure out how to get all of these diverse members at Lloyd's to sign on to this process. For the issue of the audit itself, Cuthbert and the committee decided on something quite like Cuthbert had already been doing, looking at the 3 completed years that had not been closed and then assigning weight to the results of profit and loss for each of those years. Those figures were then applied to the current year. Obviously, this wasn't perfect. You could have terrible years and then a great year, and you'd done nothing different from an underwriting standpoint, but it did introduce at least some transparency to the book. The second part, getting underwriters to sign on, Cuthbert took the position of writing out a document that agreed to the audit and asking underwriters to sign off on it. Importantly and funnily, he did not sign his own name until several underwriters had already signed on it. In a sneaky way, it separated honest underwriters from those who might not be so honest, or at least it looked that way, which was the important part. To not sign was to indicate maybe you were afraid to let anyone look at your book. That perception was enough pressure to get people to sign on. As the audit really started to become the process, a couple of things happened. First, Lloyd's apparently discovered that some brokers had been using the underwriter's stamps with their full knowledge. I mean, that's kind of confusing to people who don't know how Lloyd's work, but let's just say they were basically operating a broker as a managing general agent, but with no written contract. Eesh, that could have gone terribly wrong, and I think they were very lucky that it had not blown up in their faces already. In addition, they found that some underwriters were operating what are called baby syndicates. Basically, a smaller syndicate with a few people, usually including the underwriter as a name, where the occasional excellent risk would be diverted from the main syndicate into the baby syndicate, resulting in a smaller syndicate with much better results than the main one. And of course, this cherry picking of risks meant that those people on the baby syndicate made a lot of money. If this sounds familiar to you, well, it should. And amazingly, Lloyd's knew about this and they really were never able to stop this process until the asbestos crisis, which is amazing. For the names, the implementation of the audit meant they were finally getting some information annually about their positions within their investment, which was great for them. While this is not the reason that the number of names increased exponentially during the 20th century, until asbestos changed everything about how names operated within Lloyd's, it certainly contributed to the names believing they better understood how their money was being used, even if that didn't protect them from the asbestos crisis in the end. All of this was important, and all of it was highly influenced by Cuthbert. Without the audit, I don't think Lloyd's would have survived the first decades of the 20th century. There were just so many other options for investing, for the names, and for insuring things outside of Lloyd's that were willing to be more transparent about their results and financial status. To me, this is his most important achievement. Cuthbert was important in the history of the insurance industry, but the question I'm left with is how much of this can be attributed to specifically him as a great man of vision versus Cuthbert being the right person at the right place and the right time. This is just my opinion, but I think if Cuthbert had been able to go into the Navy as his father originally wanted, someone else at Lloyd's, probably young, would have the title of the founder of modern Lloyds. I guess in a weird way, Cuthbert's disability, his partial deafness, might have been responsible for sea change at Lloyd's, which is, well, that's something to consider, especially here in the US, where the idea of diversity, equity, inclusion are being beaten down daily. From an insurance versus history standpoint, well, Cuthbert is both insurance and history here, so we all won because of what Cuthbert did at Lloyd's. I mentioned earlier that Frederick Martin, another younger member of Lloyd's in the late 19th century, worked right next to Cuthbert and was the first at Lloyd's to have a very large syndicate. Martin had no interest in writing non-marine, and let me tell you, I totally get it when someone loves a line of business and has no interest in other lines. I completely fall into that bucket, but what Martin's syndicate shows me is that there was a hunger for change within Lloyd's, though the old guard didn't seem to know how to go about it. The late 19th century and early 20th century were periods of immense economic change both in the UK and in the US, and it's unrealistic to imagine that Lloyd's was in some kind of bubble from that. It was not. As the 19th century came to an end and as younger, non hereditary Lloyd's members started building their books, that same enthusiasm for capitalism that was happening outside Lloyd's was affecting Lloyd's as well. While Cuthbert stayed involved in insurance during the 20s, by then he was starting to slow down and think about other interests, mainly sailing. I guess, like the rest of his family, the sea was in his blood. In 1938, however, he had a stroke, from which he never really recovered. In 1939, he died, leaving a significant contribution to insurance and a sizable estate for his heirs. Just a couple fun things about his family. I mentioned that Cuthbert had 5 siblings, most of whom did very well in life. 3 of his brothers were military men, 2 major generals in the army, and a vice admiral, which is higher than a rear admiral, their father's rank, in the Navy. Another, Arthur, was the only one of them to go to a good college. He went to Trinity College, Oxford, and became a member of Parliament for many years. Cuthbert's sisters, Ada and Marion, did what you would expect women of that time to do. Marion married a military man who died on his way back from India, and then married another military man who died in India. Poor Marion had terrible luck. Ada married a man in the piano manufacturing business, a business which Cuthbert got involved in when it turned out they weren't very good at managing the business, and so this help included making loans to the piano business from Cuthbert's insurance company, the Excess Company, which that seems kind of hinky these days. When you look at the achievements of his brothers, you can see that Cuthbert had something to prove. I cannot imagine that he did not have a drive to prove his worth to his father and his family. I've always thought that Leopold basically assigning Cuthbert to insurance was a deliberate decision to keep him out of the public eye and out of his hair. There was never any discussion about sending him to Oxford or Cambridge, and, well, the military was out of the question. Though Leopold certainly helped Cuthbert out, I cannot imagine he was not proud and impressed at what Cuthbert did professionally. He was likely the richest of the children by the end of his life by far. Cuthbert himself got married late, and he married a woman, Sarah Gore Gambier, that he knew from childhood. It seems to have been a friendly marriage, if not a passionate one. His wife loved parties while he preferred work and walking and painting. His paintings are surprisingly good. While I have complained about the myth of Heath in this podcast and my feeling we really didn't know him very well, I will say that in one area he seems to be very much ahead of his time: his relationship with his daughter, Genesta. Cuthbert had 2 children, Genesta and Leopold. I've already mentioned Leopold before, and he seems like a slightly mediocre version of Cuthbert with a lot less drive and talent. Get this. At the end of Anthony Brown's book, he has an index. Genesta gets a good 2 inches of reference. Leopold gets nothing. He isn't even in their index. Just kind of crazy. It appears Leopold went to Cambridge for a few years and served in World War I. His involvement in the British Aviation Association as secretary is the only indication I found that he ever worked at Lloyd's, and that was only for a short time until the association was shut down. I'm actually not sure what Leopold did for an occupation after that. Genesta, however, she fascinates me. She was born in 1899, and given her birth and social position, you would expect her to have followed the path of other women in similar circumstances. She married a man named Arthur Farquhar in 1919. He was the son of an admiral and a former military man himself, so at least in the beginning, she was trying to fit into the mold of her family. A few years later, she and Arthur went to Africa, and she apparently fell in love with another man, Captain Edward Long, nicknamed Boy. That's unfortunate, but Anyway, she divorced Arthur in 1924 and married Boy. I cannot even imagine what level of scandal this was, especially since she and Arthur had two very young children. After marrying Boy Long, she basically lived the colonial life depicted in Out of Africa. A book from the time describes her this way, quote, Genesee Long was slim, elegant, and rich. She wore long pendant earrings, had a well-developed sense of drama, and was tougher than she looked. She'd come to Kenya as a bride in 1923 on safari with her first husband and fallen in love with Africa, the safari life, and the prospect of adventure. Subsequently, she also fell in love with Boy Long and they married. She bought the ranch Nadirat on the shores of Lake Nakuru, where she designed a splendid house with enormous rooms built round a patio with a fountain playing in the middle. She was an accomplished horsewoman and a good shot. A semi-tame hippo used to share the cattle's drinking troughs, unquote. Genesta and Boy divorced sometime before 1946 when she married Lord Claude David Hamilton. Genesta also wrote several books about Africa and was a pilot in a time when flying was still rare for men and certainly more rare for women. She was apparently quite close to Cuthbert despite the physical distance and was a dedicated letter writer, and he was as well. Given the time and her social status and the divorce, I think she's fascinating. And I think the fact she was so close to Cuthbert speaks volumes about his personality. I would not have expected Cuthbert to so embrace a child who was pushing all of society's boundaries. And I wonder if women had been allowed to underwrite at Lloyd's at this time, what Genesta might have done, as someone who clearly thought outside the norm and took major risks. I should mention one person at Lloyd's that I mentioned briefly today, but who was also involved in one of my other episodes, the episode on the Titanic. Christopher Head, who was the son of Henry Head, aka the owner of Henry Head and Company, the first insurance-related company Cuthbert worked for after his meandering European education. Christopher became a director of Head and Company after his older brother passed away, leaving behind a relatively successful legal career. Christopher had worked closely with Cuthbert over the years, most notably on the earthquake and hurricane analysis I discussed earlier. From all accounts, he was one of Cuthbert's closest personal friends. Christopher Head died on the Titanic. It was a business trip, and he traveled alone, planning to head to the West Indies after the Titanic was supposed to dock in New York. He had a life insurance policy of £25,000, worth about £2.4 million in 2025, or a little over $3 million US dollars. Cuthbert's daughter, Genesta, described Cuthbert as distraught over the news. It was an unfortunate end for a good underwriter and a friend. Sadly, most of Cuthbert's companies are no more. His syndicates, I believe, fell victim to the asbestos crisis at Lloyd's in the 1980s. C.E. Heath, the brokerage company, was a dominant player in the market until the 1950s. That decade saw the creation of many large brokerage companies in the UK. As a result, Heath was no longer a dominant player. While C.E. Heath went public in the 1960s, they never achieved the success they'd had at the beginning of the century. In 2000, Heath merged with another broker, Lambert Fenchurch, to become Heath Lambert. A.J. Gallagher purchased Heath Lambert in 2011. 2 years later, Gallagher dropped the Heath name, and that was that. Heath's insurance company, the Excess Insurance Company, again, not a creative namer, this guy, expanded internationally in the 1930s. What was eventually bought by an American company called International Telephone and Telegraph, ITT, in the 1960s, although I was unable to pin down a specific date. If you're a student of financial history or you work with insurance professionals who started in the business in the 60s and 70s, who have, of course, regaled you with stories, you may recall there was a huge push for giant multinationals to expand into insurance in the latter half of the 20th century. GE and Xerox were two of the best known. ITT not only owned the Excess, but they also bought the Hartford. ITT spun off the Hartford in the 90s, but the Excess company doesn't show up anywhere, so I'm assuming it was run off at some point, probably again in the 80s during the asbestos crisis. Cuthbert's long-term impact on Lloyd's is enormous. The audit changed the way that Lloyd's did business, and I think it made it possible for them to compete in the 20th century. The new, though limited, transparency was essential. His ability to think outside the box, get it? I made a pun, changed what was possible at Lloyd's and encouraged others to do the same. While I could and have argued that Cuthbert was more a product of the right time and right place than some intrinsic personal qualities that he specifically had, he was the person at the right time and in the right place. And as a result, his decisions about what to write and how to write it changed Lloyd's forever. We can take some important ideas from Cuthbert, such as finding the unmet need and trying to ascertain how to provide coverage for that unmet need, and how to determine a sensible premium for that coverage. We can be open to new ideas and ask ourselves, why not? We can press for finding new ways of thinking about risk while making sure, as Cuthbert would have, that the contract is fair between the parties. We can also be cautious about all these ideas and how we evaluate the success or failure of any insurance product or insurance company. And we can remember that everything changes, and it sometimes takes just one person to tip the scales. Thanks for listening. Show notes, a list of sources, and additional reading suggestions can be found on my website, which is linked in the show description on your podcast player. If you enjoyed the podcast, please subscribe to the show on your preferred platform to be notified of new episodes as soon as they drop. And let other people know about the podcast by spreading the word. And remember, be safe, be smart, and read your policy wording.